Turn over to you, Pat. So you have this company and, you could do several things with it. You could keep it, private. You could go public via traditional IPO, or you can go public via SPAC. Why the decision to do a SPAC merger and now?
That's a great question. You're absolutely right on all three of those alternatives, and we evaluated all three of the alternatives. We've been looking at taking the company public for probably 4 years or so. We actually talked to several other SPACs, and we hired Cowen and Company to get us up to do a traditional IPO. And then we met the Bespoke team last August, and there were a lot of very, very intriguing things for us. The size of their SPAC in terms of matching up to put us back at a zero net debt position on a go-forward basis. And then the people on the team with Paul Walsh on there was 13-year run creating $80 billion of shareholder value at Diageo. And it was really, we're running a page out of his playbook, which was, growth through premiumization, growth through innovation and acquisition. And then Mark and Rob, had a 6-year plus investment in Inventions, one of the world's largest closure companies in the wine industry. So they understood the industry. They had a lot of contacts with it and very, very strong in the financial and capital markets. It just made a lot of sense to me and a great marriage. And as one of the major shareholders and somebody that's not going to sell for at least 3-4 years, I wanted long-term partners, and I wanted the opportunity to continue, to grow our company. At some point, even though I've been running the company as my own personal LBO shop over the last 10 years, you need more equity to continue to grow. And, we're 200 million revenue now. I see no reason why we can't get to 500 million in revenue very shortly and $1 billion in revenue. And so it was a great opportunity to get the capital and continue to grow the company.
Awesome. And, sticking with you, Pat.
So Vintage Wine Estates, we're a $200 million revenue company. We're in the premium segment of the wine business. We have over 50 brands. We've grown on our top line over the last 10 years, a 21% CAGR and a 24% CAGR on our EBITDA. We're a highly profitable company, and we continue to look to grow the business. And we have a very strong organic growth in our business, and we do a lot of acquisitions. We average 2 to 3 per year, and we anticipate continuing to grow through premiumization, innovation, as well as acquisition. Focus on wineries in California, Washington, and Oregon, and our business is highly diversified in that 30% of our business ships direct to consumer. 30% is with exclusive brands with our major retail partners in the retail segment, and then 40% in the traditional wholesale market. So very well diversified company, growing through the pandemic. Excited about continuing to bring in new capital so we can make additional acquisitions.
Quickly pivoted. We are lucky in that we have Paul Walsh as our lead operating partner and the chairman of our SPAC. Paul was the CEO of Diageo for 13 years. He and his team created over $80 billion of shareholder value during his tenure as CEO, and he built the world's largest spirits company. So when we decided to broaden our search beyond cannabis, wine was a very natural extension. And we were lucky enough to find Vintage Wine Estates, and we said, this is actually the perfect acquisition for us. We can add a lot of value to the business. My partner, Rob, and I have been investors in one of the world's largest wine closure businesses for the last 6 years, a company called Benzinga. Makes about 3 billion screw caps and corks for the global wine industry. So we know a lot about the supply chain. We know the potential targets, and it was really a perfect marriage. Why are we investing in Vintage Wine Estates? We love the business in terms of its market position. It's in the most rapidly growing part of the wine industry, historic and forecast growth of around 6% organically. The company, we're expecting to grow at 9 or 10% because of its strength in the direct-to-consumer business. In the exclusive brands business, direct-to-consumer through COVID has been growing at north of 10%, the exclusive brands business at around 25%. And so we have a very powerful platform that the company's built in terms of its three-legged distribution stool. And because of the capital investments the company has made into bottling and distribution, the company is extremely well positioned to really grow its margins going forward. So we're expecting the company to grow at about 9% organically, another 9% or so through one acquisition per year, and EBITDA growing in the high teens organically and north of 30% with one acquisition. So compelling. And from a valuation standpoint, what we were able to do here with Pat, because we're all long-term shareholders, this is a 18-month lockup, nobody's selling any shares other than a small amount going to existing shareholders. We've priced this at less than 13 times next year's EBITDA and 21 times on a PE basis. And nobody's talking about earnings for SPACs these days. This is a real company with real cash flow, very strong growth potential. And you measure it up against Duckhorn, the main competitor, and Duckhorn's trading at a a 21.5 times EBITDA multiple next year and a 45 PE. So it's, in my mind, it's pretty simple as to which one you buy.
The wine market in terms of price.
Yeah, so the one area we don't really play in is the value category, the sub $10 category, because we don't think you can make margins at it, and it's a very competitive category. And it's also a category that's not growing, it's actually declining. So we like being in the premiumization category, and we like the fact of having multiple brands really diversifies our risk. We don't have any single brand that's more than 12% of our revenue. So if one brand slows down a little bit, we've got plenty of others. And so we've got a multifaceted distribution base to go after the business, and we have a lot of diversification through types of brands at various price points that we have in various wine styles. And so it adds a lot of diversity for us, and it de-risks the company.
And the company has long-term relationships with some of the largest retailers in the country: Costco, Albertsons, Kroger, Target, and they partner with them and they provide them with exclusive brands, but also the ability to sell additional brands, right? So, it leads to more shelf space. And as you look at this growth opportunity through scale and distribution, you can see that in Kroger, we have a couple of major SKUs. They want more. So does Target. There's probably a 1 million plus case opportunity for the company off of a base of 2 million, just expanding what we currently have with these customers. They are desperate for innovation. And Target, for example, the company created this new brand, Photograph, which just got launched. And anybody who's near a Target that sells alcohol, you should go check it out. We expect that to be quite a large brand, and it's exclusive to them for a period of time. And then we have the ability to take it nationally. They did that with Bar Dog very successfully. And so it's another one of those legs on the stool that we think is really powerful. And we have the ability to market virtually all of our brands on a direct-to-consumer basis. Unlike the spirits industry where you can't sell directly, you have this 3-tier system. Great news about wine: you can go direct to consumers in 46 states in the United States. And the platform that this company has built is unique. Most of the other winery companies, they're lucky if they have 10% in terms of direct-to-consumer, and most of that's coming from a tasting room that was closed for the last 12 months. Our guys actually grew the direct-to-consumer business by 10% plus during COVID with half the business closed, which tells you the power of the diversification approach.
Yeah, awesome. That sounds great with that Target deal there. I'll have to check that out. Mitch, what do you got? I know you want to hop in with some questions here.
Yeah, so one thing I was looking at is looking at some adjacent opportunities here being mentioned in the investor presentation. So, of course, what stands out to me here on the right-hand side is when federally legal, but of course, cannabis-infused beverage. Can you tell me a little bit more about what are you guys thinking about this market and how do you guys see it growing?
We know a lot about this space, right? We looked at over 100 cannabis companies. Then we looked at a large number of consumer companies, CPG businesses as well. And, the company has 1,100 licenses, liquor licenses. We do not want to jeopardize those. So we're not going to play in legalized cannabis until it's federally legal or decriminalized.